Well, investors flocking to emerging markets, but where should they land? The world's biggest bond fund has a favorite destination, and Sara, we gave it away already earlier, Brazil, right?
Yeah, Pimco's pumping more cash into Brazil. That is what co-head of emerging markets Mike Gomez tells me. He likes the fact that Brazilian companies have healthy balance sheets and good market valuations, but for Pimco, there's even more potential there. Listen to what he told me.
This is a country that's investment grade rated. They have inflation which hovers between 4.5% and 5%. They have an operationally autonomous, very disciplined, well-respected central bank, and yet 5-year onshore debt in Brazil pays you about 12.5% in nominal yields. So to us, that seems like a very attractive degree of compensation for a very well-run economy.
Betty, talk about high returns. Brazil's bonds paid a whopping 8% return over the past year. Now, that's almost double the average return for the emerging market stocks in a very maturing market. So pretty impressive returns there in Brazil.
Now, what about the developed markets, the U.S., Europe?
He's very bearish on developed markets like U.S., like Europe. You know, he says that we're in an adjustment period for these markets, referring mainly to the massive debt loads from these governments. And Betty, he's not going anywhere near Greece at this point, saying the debt dynamic math still does not look favorable for Greece. So not only does he love emerging markets, but he hates the developed world as well.
Okay, all right, well, I guess it kind of makes sense then. Thanks so much, Sara.